All right, welcome to our weekly, roundup, report, review, getting ready for the new week. As always, great to see you all. This is when I sit down on a Sunday evening here in my office. Welcome to my office, and I start preparing for the week ahead. I start thinking about what last week's trades were, what type of trades I'm taking into this coming week that are open, what my watch list is going to look like for the coming week, and what kind of hot zones are we going to have deal with. Of course, it's really only one to talk about. On Wednesday, we have the FOMC expecting another 75 basis point hike. So when we get into a week like this, remember that we've already discounted what we expect this particular meeting to do. We also know what we expect the top end of the target rate probability to get to as well. And that is in the vicinity of the 3.25 to 3.5, 3.5 to 3.75 rate. So we know where rates are heading. When I say we know, we have a probability based on a tool called the Fed Fund Futures that gives us an idea of where the Federal Reserve is most likely heading with their rates. That really is the most important right now. That is absolutely the most important number. It's not whether or not we get 50 basis points or 75 and what each meeting is going to give us. It's cumulatively where are we heading and where are we going to be by December. I mean, everything that we'll be dealing with, GDP, NFP, CPI, PCE, anything with inflation, jobs, and growth is really going to map to that December Fed Fund Futures column over at the Fed Watch tool, which I know I've shared with you all in many of the free videos over at the Simpler Trading YouTube channel. I talk about it every week with my mastery folks and the futures folks over at Simpler Trading for our macro market deep dives. And I think a lot of traders might think, well, I'm a short-term trader. Macro doesn't apply to me. You may be right, maybe not as much, because macro is a larger, slower moving tectonic plate. It takes a while for it to get going, but once it does, we've got earthquakes and volcanoes, right? But ultimately, even knowing which macroeconomic releases, even having a fine-tuned sense of which events on the calendar are going to be a little bit more needle moving than others is going to help a shorter term time frame trader. So there's really nobody that's not going to benefit from an understanding of what we're talking about right now, which is why, because we have the FOMC on Wednesday, that is why we're discussing what those target rate probabilities are and where we're going to be most likely based on that futures contract in December. All right, so that's the first part of our discussion. The second part of our discussion is we had a little bit of a sell-off on Friday. This is still an area that I'm looking at to be toppy. Now, when I talk about something being toppy, it's hopefully something that's 2 points. One is on the price chart, we have a Darvist or we have a major psychological level, maybe both. We have a minor high pattern and we have a stochastic. I recorded something. Let's see here. Do I have it handy? Bear with me one moment. Okay, here we go. I have something that I actually wanted to share with you all, and we can share it here in the chat. I'm going to see if I post this through. You all tell me if this comes through or not. I'll call this Slow Stow Explainer. I get a lot of questions about the slow stochastic, how I set it up, what it does, how to read it, all sorts of things like that. And I thought, you know what? Let's do a little bit of a deep dive on that. Friday, in our weekly Ask Me Anything session over at the Simpler Trading chat rooms, I went into about a 10 minute, maybe about 12 minute explainer on how to set it up, the differences between the slow stochastics that I use, which are the exact same settings. Gang, here's a word about settings. You're never going to see me, every other week or every other month come in and change these settings. Okay. A lot of folks ask me, Rob, do these settings change if I'm on a daily versus weekly versus 5? Gang, these never change. Because remember, if I'm measuring a 21.3, that 21.3 is a different set of time, a span of time on a 5 minute. It's a different span of time on a daily. It's a different span of time on a weekly, because each interval, which is what any indicator is usually looking at, each interval is going to then either shorten the amount of data or lengthen the amount of data that the indicator is crunching through, is processing. So we never change these. If you find yourself tempted to do it, it's probably because of one reason. One, the indicator isn't speaking to you, in which case I would say find another indicator, right? If you pull up my slow stochastic after watching that, think, Rog, it just doesn't really resonate with me. Find another indicator. That's perfectly fine. But don't start getting into the temptation to change the settings. Settings should not be changed like this ever, because the reason the 21.3 works is I've traded it through many seasons. And I don't mean seasons as in spring and summer and fall, etc. Many seasons in terms of market seasons, many different market personalities, from booms to busts to, heck, even wars, you name it, bubbles. I have traded the choppy markets that occur in these seasons with this setting, right? It's time tested. So don't go in and start to manipulate these on any kind of frequent basis. It's called curve fitting, right? What it is it's called amateur hour. So don't do it. It's really going to mess up your trading life. You know, it looks great to change settings and say, oh, look, in the past, I would have got these great settings. But remember, we only know that after the fact, after it's been curve fit. So this is something I see a lot lately. And I just want to make sure you all are not heading down that amateur path, because that is not the path you want to head down. 21K, 3D, listen to me now, believe me later. All right. So check out that video. I think you all will find that really helpful. And it's something that, and there it is on the very bottom of the screen. Check that out. I think it will help a ton. All right, gang. So that was my little beginning of the show. So let's get into the best part of the show, and that is your questions. So let's get to it. First off, Michael, how are you? What ETFs currently have the most volatility? Does volatility refer to the speed of price change or the range? So, Michael, I don't look, so volatility versus velocity. Let me take the second part of your question first, if I may. Velocity is, for me, that speed. Volatility is the range. So to answer your question, volatility. Which ETFs have the most volatility? I don't know. That's why I have an indicator. That's why I have an indicator doing it for me. Off the top of my head, I don't know, and I don't have to know, right? Because what we do is we take those HPMRs and they gauge it. Now remember, volatility, especially intraday, Michael, isn't something that I would say this has the most, because remember, we measure volatility not cumulatively in terms of what was the volatility for the session. We look at it hour to hour to hour. We get that specific about it, because that way, when we're day trading at certain times of day, we're looking at the most accurate volatility readings for that time of day. So not only do I not know, I don't actually measure it that way. But as far as the second part of your question, volatility to me is the range, while velocity is the speed. So thank you for the question. All right, what is my favorite planner? Hey there, Mike. Oh, I was talking about my planners. Well, I've got two. So I've got something that I use called, this is a little index card. I don't know if it translates, but it's a little index card. Along one side, it has tasks, and the other side, it has a schedule. So that's oftentimes what I'll do for just life. Oh, I know what you're talking about. It was called, here it is. It was a planner pad. Yeah, planner pad. So let me just grab a sheet out of this thing. So I think this was the one that someone was asking me about. So this is a sheet out of the planner pad. So what I'll usually do is this is where my trade ideas will go. This is where any hot zones or open trades will go. And that's the schedule for the trading day. Now that schedule for the trading day could be my specific hours in the chat rooms. Here at Simpler, it could be, it's definitely going to be the hot zones. It might be any interviews or appearances that I have. So my trading life goes in, it's called a planner pad. And those folks have been around for 40 or 50 years. I remember using a version of that when I was in college. So they've been around a while. So I use a planner pad, which you can get over at Amazon. And I use something called, I think this is called the 3x5. Yeah, 3x5 Life. I get these little cards and these folks at 3x5 Life. They're just a small business. They put out these cool little cards. They've got a little kit. It's kind of neat. So I love index cards. A lot of my trades end up on an index card. There was a time where I had this little wooden bleacher and all my trades were on a vertical 3x5, and I would keep an eye on all my trades that way. That were, of course, swing trades, right? My swing trades were that way, my daily overnight. So that's it. Mike, I am a stationery, pen, pencil, index card, planner, journal geek. I probably have way more than any one human should, but I really do love to organize my trading life because it's just so easy for things to get unglued with as much as I personally like to do, whether it's the day trading, the swing trading, or the position trading. So it's easy for everything to get a little confusing. So I like writing everything down. I like documenting everything. Document. It's going to help you. You all know that you get my daily notes with the workflowy, and I'm a huge fan of doing that because the workflowy allows us to go back at the notes for a particular session. I'll timestamp them. So I'm a big fan of documenting. Thank you for the question. Mark asks, TLT. All right. So again, if we're ever looking at an ETF that has a futures alternative, I'll start with the futures alternative, in this case, the ZB. So TLT is neutral. It's at an 8-week high. Mark, I'll tell you the truth. I know a lot of folks say it's the highest it's been in 8 weeks, or it's the highest it's been. That really doesn't matter to me. The only thing that I think is worth noting is if it's at a new high for the day, possibly a new high for the year. But other than that, it really, the number of weeks, it really doesn't matter. But anyways, I did not know. 8-week high. Okay. Slow stow. Well, slow stow can't, when you say slow stow pointing higher, it really can't point higher at the top of the range. That's not what the slow stow can do, right? If I'm in a choppy market and it's at the 80, it's actually not pointing higher. I mean, it's heading higher, right? It's up in that range, but I know it's probably semantics, right? But it's not necessarily pointing higher because slow stochastics are not necessarily going to be indicating higher highs at the high of the oscillator. Does it look like a double top? I think, Mark, not only a double, my friend, maybe a triple or quadruple, to be quite frank. How many times have we been in this area? 3, 4 times? So spot on. I have to view this as an overbought potential short sell. So I'm either going to short ZB up at that Darvis level with the Darvis signal there, or I'm going to get long TLT puts, to your point about the TLT. But I've got to look at the ZB to set it up. Remember that bonds trade much more than bond futures, I should say, trade much more than the TLT. So while they both reflect that long bond, to your point, I'm going to want the more complete view of that market as opposed to the more incomplete view that TLT would give me. But you'll see they're very similar, but ZB has that gorgeous structure, and that is what I would look at. So I would look at puts, yes. And if we're going to set those up, yeah, I'll definitely do it in the chat rooms and send out all the details and the triggers and so forth. All right, next up, what percentage of a loss in a trade for you would you consider to be a maximum level paper cut? 25 is what I like, Nick. There are times, depending on risk and volatility, that I might push that to 50, but no more than that. So do I ever purposely let a loss go beyond the paper cut level? Purposely? Well, I mean, so let's say I'm at 25% paper cut and we're right near a volume ledge, or we're right near a major psychological level, or or a Darvis level, or something that would lead me to believe that just beyond that percentage paper cut, there is some reason to expect the market could exhaust or whatever it is that I needed to do that would not stop me out. So would I let a 25% paper cut go to 28? I have, sure. But the rule that I want to stick to more strictly isn't the paper cut. It's how much of my account am I risking? And I don't want to exceed that number really much, if ever. So the letting a paper cut percentage-based stop, by the way, go a little bit further, I'm actually fine with that, as long as I'm not exceeding the risk to the account. That's really more than non-negotiable, Nick. Yeah, I hope that makes sense. That's really the more non-negotiable number for me. Okay. All right. Next up, hey there, Ronaldo. I have all of your 3 Forex books. Wow. Okay. You and my mom. Cool. Thank you, Ronaldo. And the Forex Freedom course. Very cool. I'll soon finish reading 30 Days of Forex. Then on to the third book. 30 Days of Forex. Very cool. Wow. Those am I on the right path? The cool thing, Ronaldo, is the way that I trade Forex is frankly the way that I trade everything. There's that old saying, the way you do anything is the way you do everything. I think there's some truth to that. So the way that I trade Forex, adherence to time, technicals, macro, volatility, you'll see the same conversations happening in all my different asset class trading. So are you on the right path? The reason I will say yes is whether you choose to stick with Forex or not, the cool thing is, how I trade, because how I trade Forex is how I trade everything. So thank you for reading those. And I hope you get a lot out of them. They're pretty, it's funny. It's almost a different previous stage of my trading life, but it's really cool to flip through those books. I don't even know that I have a copy of my own book on my shelf, but it's funny when I flip through those and then I continue to see my growth as a trader, which is really something, because who you are today as a trader, when you turn back and look at yourself a year from now, 5 years from now, you should feel like a different trader. And if you don't, and I don't mean different tools and brand new secret squiggles and going down that rabbit hole, but I mean, generally speaking, there should be an evolution of what you believe in. So if you've been a fan of volume and you've got some new volume tools, cool. If you're a fan of volatility, you're evolving your volatility tools, great. But you should see an evolution of yourself. And when I read those books, I can definitely see that. And thank you, Ronaldo. Smash that like button. Happy Sunday to everybody. Absolutely. I appreciate that. How are you, my friend? I love the new additions to Sector. Thank you. We're again talking about evolution. And I appreciate the members in the Sector Secrets Mastery really coming along for the ride, because a lot of traders might have said, Rog, we're deviating from what we were initially doing, which is daily time frame swing trading. And actually, we're not deviating from that at all. I think a lot of times when people see things that are being added, supplements, they immediately think, well, something's going to go away. We're going to supplant something. And you'll see that's not what we're doing at all, right? We're still sticking with the alerts for the daily time frames and our swing trades, but we're adding the day trading. We're adding the macro. We've added the position trading. So we're really becoming a well-rounded full room that represents everything that I do as a trader. And I greatly admire and appreciate the members saying, oh yeah, I want to be a well-rounded trader. I just didn't come here for one thing. And I want to continue to learn to do more and more things with the tools that I get in the mastery. And so again, it's humbling and it's awesome that you all are coming along for the ride. All right. So next up is, bear with me here. Right. The planner pad. Yeah. As far as the planner goes, and 3x5 life for my little cards. Okay, so let's see which big tech earnings this week. With big tech earnings this week, can we expect NAS to let's go to NAS test 12.7? So, my friend, there are people out there who will answer that question. And at this point in my career, I think we all have to stand on some kind of integrity, which is really lacking in this field, sadly, that I have dedicated my life to. And what I mean by integrity is I don't know, and neither does anybody else. And I'm going to stick with that. How many here have heard me say that? I probably say I don't know more than any other trader you're probably going to meet. Because you know what? I don't know. And nobody knows. Can we say there's going to be volatility? My friend, absolutely. With earnings coming up in any sector, in any of the major indices, I would anticipate volatility. But if I start getting into predicting where we're going to go, I have absolutely forgotten what my job is, which is not to predict where we're going, but rather have a plan for what to do if we get there. And I know that doesn't sound like a huge difference, but it's absolutely the North and South Pole. Predicting arrogance at its worst, really a complete lack of integrity, is to answer your question, say, sure, there's a shot. What does that even mean? I don't really know. However, what I will ask my friend is, what does 12,700 mean to you? And I'm never going to pick on you all, but look, you're taking the time away from maybe your friends and your family and your own time. I don't want to ever waste it. So I'm going to ask you, what does 12.7 mean to you? Right? Does 12.7 mean it's a target? That means you're already in. So who cares what I think? You've got a trading plan and you're hopefully managing risk, and that's an upside target. Maybe 12.7 is a level at which you want to short. Okay, great. What are the tools you're going to use to confirm that short if we reach 12.7? And how will you confirm that it's still a valid level to short if we reach 12.7? So the first question is, what does that level mean to you? Target, short? Maybe if we break out through it, you're looking for continuation. Again, you are the one that defines the meaning of that level. And then the next thing we say is, if we get there, this is my trading plan. And that's what trading is. Now, what it's become is someone coming on the mic and giving, pulling up the S&P or pulling up the SPY and telling folks some clickbait number, like we're going to 350 or we're going to 450, right? What does that even mean? And of course, every time the market heads lower, those people come back and they like to remind everybody, see, I told you all we're going there. Remember the journey that we could travel to either one of those levels doesn't mean that we'll be able to hang on for that whole journey. Or as I like to tell my Sector Secrets Mastery folks, we don't predict, we have process. And targets are not trades. So bottom line, I don't know, my friend, but if you ask yourself, what does 12.7 mean to you? And what do you want to do when you get there? Now you're thinking like a trader. Now you've got a plan that's actually executable. But additionally, you know that there are the kind of events, really mostly the FOMC. Really, if we're looking at a catalyst for movement, I would say the FOMC would be at the very top of that list. So I love that you're looking. What I like about your question a ton is that you're looking at a catalyst for volatility. And then depending on which way we go, by the way, what if we go to 12.5? What does that mean to you, right? So just putting numbers out there, but I appreciate the question. But please remember, process, over prediction, and targets are not trades. So, and then bottom line is, again, I hope that more traders kind of embrace this and realize our job is not to throw targets out there as if we know what's going to happen, as if we can predict the future. So if I ever start to do that, call the men in black, because I have been abducted by an alien. All right, next up. Hey there, Raghee. How are you? Thoughts on FOMC? Yeah, we kind of touched on this earlier, Raghee. It doesn't really matter to me. 1 point, 3/4 of a point, does not matter. Here's what matters. Everything is going to be bounced off that December target rate probability. That's where we peak. The two things we have to be aware of now, and this would not have been what I would have talked about 90 days ago, even 60 days ago, borderline. We're not interested in the meeting by meeting messaging. It's pretty much the same. At this stage, in the more, about halfway through the hikes that we're expecting, in this more mature part of the tightening cycle, when are we peaking? Which meeting month is the target for the target rate probability? Because we'll know that because we click on that meeting and we see the subsequent meetings are pretty much staying at that same level. So what's the target? When do we get there? And does that change? That's the way we need to look at the target rate probability. And for those of you that checked out the light at the end of the bottom, we did that on the 7th. We said, look, gang, we're not going to see lower lows because the macroeconomic environment has shifted as well as the trend structure, the market trend. So if you check that video out from the 7th of July, you'll see this sort of same conversation. So whether it's a full point or a 3/4 point hike, we might get some momentary volatility, clearly. But remember, the real needle mover is, are we still going to peak in December? And what column, the 325 or 350 or the 350 to 375 column, are we going to see the most probable? That's where the understanding, that's where the game is being played right now. So thank you for the question. Let's see. Next up, I've been doing live trading for about a week now and did 8 trade losses. 8? Hang on, Raghee, I've been doing live trading for 1 week. Okay. I don't know what kind of trading you're doing, my friend. Did 8 trade losses. And 8 trades lost. I'm not sure what I'm reading. Not sure if I'm doing good. I'm not sure what you've shared with my friend. So you've lost 2 out of 8, I think. You've had 8 trades and 2 losses. Okay. My apologies for not understanding. So you've had 8 trades and 2 losses. No, you're fine. You're fine. But that's not, look, the win rate isn't the only thing. You've got then 10 trades total to get an 80% win rate. That's actually a little high. That's a little high. You might be taking profits off too quick. However, that being said, are you doing all right? Oh, gosh. I mean, from a win rate perspective, yes. But let me dive a little bit deeper, right? Because this is really what matters. Are you trading with the trend? Are you limiting the risk to your account to a percentage so that you are not over positioning or over risking on a single trade? Are you following a process? Was it the same process for every one of those trades? If it's 8 trades and you lost twice, again, if it's 10 trades total or 8 trades, so either way, it's a good win rate. So the process is the most important. Were each one of those trades following the same process for risk, following the same process for what would validate an entry? Focus on your process right now, since you're just switching over to live trading. Focus on process, focus on risk. Don't worry about your win rate right now. There is such a thing as a good loss. There is such a thing as a good loss. Because if you told me, Rog, let's say you reverse those numbers, my friend, and you only had 2 wins and 6 losses or whatever that ratio is. But you followed your trading plan. It just happened to be the market stopped you out. There is such a thing as a good loss, right? That's part of the process. Because the process, if proven to have a good win rate over time, right? When you scale that process out, it's hard to say either way because I'm really not sure what kind of trades you're putting on. But my friend, yeah, I think from what I can gather, again, very surface level, keep up the good work as long as you are focusing on a process for position sizing, for risk, and for entries. I'm just going to come back to process. So thanks for the question. Let's see. I accidentally bought a weekly contract for a daily trade in XLF. What are the implications? Kathy, look at the volatility and look at the look at the volume. Look at the volume and open interest and look at the days to expiration. It's not a huge deal. I don't think it's a big deal at all. Just if you want to get out and you can, go ahead and get out. And as long as it's a liquid contract, if you have a trade that you've taken as a mistake, my rule usually is just get out and then just get flat, because I don't like to have to sort of backpedal, sort of dancing backwards in high heels, if you will, with a trade. Um, I'd rather just get flat. However, if you look at the trade setup and you look at the strike and you look at the time to expiration, and structurally XLF is still in your favor, and you can control risk in a fairly liquid strike, then I don't have a problem with that. Quite frankly, I've done it. We've all done it. I've done it as well. Sometimes, we fat finger the wrong contract, but usually because I'm looking at open interest, it doesn't happen to a place where I've gotten into illiquidity. Illiquidity is really what concerns me more. Okay. Let's see. Robert mentions lots of noise about the Fed moves being baked into the market. Of course. If we have an idea about what that basis point hike is going to be, of course, that's for every single hot zone. That's for earnings. That's for GDP. That's for PCE. That's for non-farm payroll. That's how the market works. Everything is baked into the cake, to your point, right? But no one seems to know when. Lots of noise with the Fed moves being baked into the market at some point, but no one seems to know when. Yeah, we know when. Of course we know when. So Robert, the way that when it comes to Fed moves, and actually when it comes to anything, when we have more proximity to the event, we can get a consensus number. We can have a whisper number. That would be for earnings, of course. With the Federal Reserve, it's probably the best because we can actually look at the different columns of the Fed Fund Futures graph that the CME puts together, and we know the percentages for each one of the probabilities. So probably more so than any kind of hot zone. When it comes to the Federal Reserve, we absolutely have, with a high degree of certainty and a high degree of sort of clarity and to granular look, right? We know what the probabilities are for the different possible outcomes. What if they hike 1 point? What if they hike 3/4 of a point? What if they only hike 50 basis points? You can see the percentages for all of that. So yes, you can see that on that tool that I show you all to check out. That's the CME countdown to FOMC. If you Google that, you'll find it. We can know with a high degree of certainty what we're expecting as the most likely probability, the second most likely probability, the third most likely probability, the percentages. We can even see what it is right in front of the event. We can see what it is today. That's probably one of the easiest to track. Yes. All right. So next up is, let's see. Oh, are we out of time? Okay, let me grab one more question. Bear with me. SPY 380 puts for next week. What's the setup? I won't buy out of the money puts. So I don't like out of the money. But Manny, if you have a short setup, it's overbought, which I agree, and you're looking for movement lower, I like slightly in the money or at the money puts, or at the money puts. So if I'm going to get tactical on that, I want to have a position that would mimic how I would short the SPY, right? How I would short the SPY in terms of mimicking a short position. So, ultimately, when it comes to that level being overbought, remember, like we talked about earlier with the ZB TLT, ES begins the conversation. 4,000 is the level. And then if I were shorting the ES, my short would be at that ceiling, right? And if I was going to enter SPY, I would short as close to 400 as possible. So that's where the strike would come from, okay? So I hope that makes sense. All right, gang. So, all right. That is it for today. Just kind of grabbing some of the symbols that you all have questions about. Sorry, I left some questions still out there, but gosh, that 35 minutes goes by so quick. Thank you as always for being a part of our Charts and Coffee, not Charts and Coffee, our weekly Raghee Report show. Tomorrow at 9 a.m. we have Charts and Coffee. We'd love to see you all then and there. Gang, remember, we are going into a very volatile week. And sometimes the best thing we can do is realize that we can be long, we can be short, and we can absolutely be flat. Flat is a position, right? So if you're looking at the market thinking, wrong, I don't want to deal with this volatility. I'm not quite getting what you're saying about the macro. I don't understand what the Fed is going to do and the implications. Believe me, there is no problem with being flat. If you're looking at the intraday volatility and that thing makes you feel like you need to take some Dramamine, no one is telling you have to trade through summer. Take notes through summer, observe through summer, educate yourself. You do not have to engage the markets all the time. The best traders I know do know when they don't have an edge. Or the analogy that I love, the best major league batters, they know their pitch and they're not going to swing at something that isn't their pitch. So when I'm setting up a day trade, I'm thinking, I think I want to take a swing at this thing, right? It's over the plate exactly where we want it. That's the mindset. And if it's not, let it go. It's somebody else's pitch. And that's a healthy way to look at the markets. All right, gang. I'll see you tomorrow morning, 9 a.m. for the Charts and Coffee show. In the meanwhile, thank you as always for joining me for these Sunday. Golly, Rog, you're all over the place. Thank you as always for joining me for these Sunday shows. This is when I like to get ready for the market and also really figure out what day it is. All right, gang. Be good to each other. I'll talk with you soon.